session so that I know who the response, how the response is for the class. Now, this is the midterm notification, which I'm sharing with you. These are the areas I'll be testing you in the midterm exam. Can somebody tell me, can you see this document notification? Can you all see it in your laptop? Am I sharing it with you? Somebody must answer. If everybody is quiet, then I don't know what's the outcome. Okay. You all are very shy to talk. Now, this is the format of the midterm examination. There are 3 questions, and you are required to answer all the questions. And the questions cover both calculation and discussion type questions. That means theory type questions, which you have to discuss. The topics that are tested are as follows. First, introduction, contemporary management accounting development, cost allocation and service costing, activity-based costing, ABC, budgeting, and then flexible budgets and variance analysis. Now, these are the areas I'm testing you in the midterm exam. The duration of the exam is 2 hours of writing time. And this assessment component accounts for 20% of the overall mark for this subject. So, 20% is a lot of marks. So it can affect your grading. So make sure you take note of that. Now, I've shared this in the LMS. I hope you can see it or you have seen it. I've already shared it with your department, and I've told the administrator to inform you about this notification. If not, please let me know. I will check again for you. Now, for this revision, what I plan to do is I plan to discuss some questions related to the topic that I'll be testing you in the midterm exam. Okay? So the questions I have uploaded, the revision questions, midterm revision questions, which I will share with you shortly. So can you all look at the question, please? It's in the LMS. Huh? All of you refer to the LMS. The questions are there. Some of these questions could be your tutorial questions, some discussion question for the revision. Now, any response from you will be appreciated. Now, these are the midterm revision questions which I have sharing with you. The first question refers to ABC, topic of ABC. Question 1 is focus on ABC method. Now, this topic is definitely tested in the midterm exam. So you should be familiar with the method and the workings. Please show detailed workings when you answer the question. He says, Brilliant Accents Company manufactures and sells three styles of kitchen faucets: brass, chrome, and white. These are the three types of faucets that they sell. Production takes 25, 25, and 10 machine hours to manufacture 1,000 unit batches of brass, chrome, and white faucet. Take note, it takes 25 machine hours for brass, 25 machine hours for chrome, and 10 machine hours for white faucet, respectively. The following data apply. The data are as given here. Projected sales in units: 30,000 for brass, 50,000 for chrome, white 40,000. Per unit data, selling price given for all three. Direct materials also given for all three, the cost. Direct labor given for all three types of faucets. Overhead costs based on direct labor hours. This is the traditional method. This is the traditional method of charging overhead costs to the product. They say $12 for brass, $3 for chrome, $9 for white. The hours per 1,000 unit batch are as follows: direct labor hours 40, chrome 10, white 30. Machine hours given for each, setup hours given for each, and inspection hours given for each. These are the different tasks they perform. Activity. Total overhead costs and activity levels for the year are estimated as follows. Direct labor hours, total 2,900 hours. Machine hours, 2,400 hours. Setup, total overhead cost is 465,500. And there are 95 setup hours for the period. Inspection, $405,000 and 2,700 inspection hours. Now the question says, required. Using the traditional system, determine the operating profit per unit for the brass style of faucet. Okay? And the traditional system uses labor hours. Okay? They use the labor hours method to charge overheads. And then part B says determine the activity cost driver rate for setup costs and inspection costs. Followed by using ABC system for the brass style faucet, only for the brass styler. They wanted to compute the estimated overhead cost per unit, and then compute the estimated operating profit per unit. Now all these are calculations. And then D says explain the difference between the profits obtained from the traditional system and the ABC system. Which system provides a better estimate of profitability? Why? Okay? Now, you would have studied how to work this out, but I will show you the steps involved. Okay? Now, can you see this slide I'm sharing with you? If you cannot, please let me know. Now, this is how you answer the question. Now, I have explained the answer in brief terms, but when you do in the exam, you make sure you write it properly. Now, the operating profit per unit, that's what the question is asking for the brass style format. There are three styles, but only they're asking for brass, not for the other two. That is, they're not asking for chrome or white. So you only focus on the one product. So the operating profit is $5. Now, how did I get $5? I took the selling price, which is $40. From that minus material costs and labor costs. Add in the overhead, which they have given me, $12. This is the overhead cost they allocated to the brass style, $12. Add that. So 40 minus this, that is 8 plus 5 plus 12. So altogether comes to 33. Okay, sorry, 35. 12 plus 15, 35. So 40 minus 35 give me $5 profit. Okay, I think you can see that. Then the second part of the question, determine the activity cost driver rate for setup costs and inspection costs. So you know how to calculate the cost driver rate. Cost driver rate is equal to setup cost is 4,900 per setup hour. How did I find that out? Because the question has given me the total cost is 465,500. Look at the question. This is the setup cost. And the total activity is 95 setup hours. So 465,500 divided by 95. And I get the rate per setup hour, which is 4,900. For inspection costs, is 150 per inspection hour. Same format. I take the total cost, divide by the total inspection hours, 2,700. Now this is given to us in the question. Okay? Therefore, it's 150 per inspection hour. That they said, using the ABC system, okay, compute the estimated overhead costs for the brass style, and then estimate the operating profit for the brass style of faucet. Okay? The overhead cost per unit for brass style faucet is $940 per unit. Now, how did I work that out? They have 30,000 units in projected sales, and each batch is 1,000 units. So 30,000 units divide by 1,000 units per batch, I can find out how many batches they produce. And it shows 30 batches. Okay? 30 batches that one setup hour per batch is 30 setup hours. And 30 setup inspection hours times 30 batches give me 900 inspection hours. Okay. Then 30 setup hours. This is for next item, setup costs. See how I work out? I took the total overhead divided by 30,000 units. It's 490 per unit. And I have 900 inspection hours. So 900 inspection hours times 150, give me the total. Divide that by total units, 30,000 is 450 per unit. Therefore, the overhead cost for brass faucet is 490 plus 450, $9.40. And therefore, the operating profit is selling price 40 minus the total cost. Material, labor, overhead. So it gives me 760 profit per unit. Now this is how I should work it out. Now you please lay out the format that you have studied in class, but the answer should be the same. Now any query? Any questions, students? I'm not getting any response from you. Now, if you don't respond, I don't know whether you are following or not. Then I come to the last part of the question, part D. They want us to explain the difference between profits obtained from the traditional system and the ABC system. Every system provides a better estimate of profitability. Why? So you see, traditional system, the operating profit per unit is $5. ABC system, the operating profit per unit of brass faucet is $7.60. And you notice the system of when I use different methods, the traditional and the ABC method, I notice the profit is higher in the ABC system compared to the traditional system. So I say, because the products do not all require the same proportionate shares of the support resources, especially setup hours and inspection hours. Now the traditional system assumes it's the same, but here the proportion different. So the ABC system provides different results than the traditional system, which allocates overhead costs on the basis of direct labor hours. Because they are using labor hours in the traditional system, and it assumes both the setup and inspection cost is the same per hour. But ABC system says no, they are different. So the ABC system considers some important differences in overhead resource requirements, and thus provides a better picture of the profitability from each faucet style, provided that the activity measures are fairly estimated. Okay? Now, this is the typical type of questions you are asked in ABC in the exam, whether it's the midterm or final. So you must know how to answer that. And please answer to the point. You don't have to elaborate a lot, just like what I have answered here. And therefore, you can easily score the full marks. Okay? Now, any questions so far? Students, any questions so far? I give you 5 minutes to look through the answer. See whether you have any query. Any questions at all? And they normally say the ABC system gives you more accurate cost allocation compared to the traditional method. Because in the traditional method, we lump all the overheads together and we go by departments or processes. But here, we disaggregate the information. That means go into different activities. And then we charge the cost accordingly. Students, any further questions? And since this type of question is tested in the midterm, you must do it as correctly as possible so that you can secure very good marks in the overall exam. Now, I've just grouped up the overheads like this, but when you show it, you want to show it in the format that you have studied in class, you can follow that. But make sure the final answer is the same. Okay? Can I move on to the next question then? Any questions, students? If you don't ask me any question, then I presume everything is okay. All right, if there is no further questions, then let's move on to question 2. Now, this is the theory type question that will be tested in the midterm. You know this method, this question? It says describe methods which may be used to allocate support costs within organizations containing multiple support departments. Discuss advantages and disadvantages of the various methods. Now, this is one of the methods of allocating service costs to production department. Service costs is support department costs to production departments. Can somebody tell me what are the methods you have studied here? Students, one of you should answer. Don't be quiet. Pam Anto. Is it the student or the lecturer? If it's a lecturer, then I will not ask you the answer. Can somebody respond? Wen Dang Tui? Are y'all there? Are y'all following the class? Okay, let's look at the second question. I'm sharing the answer with you. There are three methods which are used to allocate costs of support departments to the production department. The three methods are the direct method, step-down method, and thirdly, reciprocal method. Direct method, step method, and reciprocal method. Okay? I hope you have done this. Now here, I only describe the method. But if possible, when you answer the question in the exam, you can give an example. Now see how the direct method works. The direct method allocates support department costs only to the operating department. That means to the production department. In other words, they ignore inter-service. Ignore inter-service means one service department does work for another service department. That is ignored here. What is the advantage of that? Advantage is that this approach is simple, simplicity. However, the disadvantage of the approach is that it does not take into account the extent to which some support departments use the services of other support departments. Now, this point is important because some of the costs of support department go. So it's not fair to charge these overheads or this cost to the operating department. So I said the resultant permutation of costs will not be distributed to the operating departments accurately because they will not have recognized the mutual services provided among all support departments. Okay? And this is something that they say is unfair. You only charge the costs appropriate to the respective departments. Okay? And in this way, the proportion you allocated will be different. Now that is the direct method. You only charge the overhead costs to the respective departments that use the services. The second method is the step-down method. Look here, the step-down method. Now, the step-down method allocates the support department costs to other support departments in a sequential manner that partially recognizes the mutual services provided among all support departments. Take note, partially. So if I take one support department, allocate the cost to the operating departments, part of the cost will also be allocated to the other support department if there is any inter-service. Because the step-down method, the first method, direct method, assumes no inter-service. But here, they partially recognize inter-service. That means one service department does work for another. And after you allocated the cost, you close the section. Then you come to the next support department. So the method usually ranks the support department in order of the highest percentage of total services to other support departments. Now this point is important. So in this way, I make sure that the department, that's the support department that does more work for the operating department, is allocated first. This provides more accuracy than the direct method, with a minimum added level of complexity in the process. Now, this is the minimum level because they only recognize the support department cost to other support department at the first allocation. After that, is not taken into account. They assume it's only for the operating departments or production departments. Students, have you all done questions related to this in your tutorial? Still no response. Please, students, if you don't respond, I do not know how you are getting on. Next, I go to the last method, the reciprocal method. Now, this method recognizes inter-service all the way. And that's why I said the reciprocal method allocates support department costs. Now, who is this in the toilet? I see the photograph of this student in the toilet. Dang Tui. Dang Tui, are you listening? Please, when you are doing the class online, have some courtesy in the sense that when you want to do things on your own, please switch off the camera. So I said the method here, fully recognizing mutual services provided among all support departments. The method is complicated in that it either requires an iterative series of allocation or a linear programming solution to determine the final amounts to be allocated between the support departments, which use each other's services. It provides a highest level of accuracy, but is complex to implement. Okay? So I wanted to expand your discussion of the three methods in the exam if a question like this is asked. Okay. All right. If no questions, then let's move on to question 3. Now, question 3 is another topic that I said I'll be testing you in the midterm exam. And this is on variance analysis. So can you read the question first? Question 3. Now you read the question and try to understand it before I discuss. Now I want you to study this question for 5 minutes and then I'll come back for discussion with you. Now the 5 minutes is up. I hope you have read the question and understood what they have given you and what you have to do. It says the following data for the telephone company pertain to the production of 450 rolls of telephone wire during June. Selected items are omitted because the costing records were lost in a windstorm. Now, the direct material. All materials purchased were used. Because, sometimes the material purchased, not all are used. But here, all are used. Now, the standard cost per roll not given, alphabet A, dash pounds at $4 per pound. Total actual cost B, missing, gives us the number of pounds costing $9,600. The standard cost allowed for units produced was $9,000. Material price variance not given. I have to find out. But material efficiency variance is $80 unfavorable. Now that is for material. Then for direct manufacturing labor, standard cost is 3 hours per roll at $8 per hour. Actual cost per hour was 8.25. Therefore, total actual cost not given D, and labor price variance not given, and labor efficiency variance is $400 unfavorable. Now, all this is what you have studied in standard costing or variance analysis. And they focus on two major direct elements, and that is direct material and direct labor. And in direct material, we have both price variance and efficiency variance or usage variance. Labor, same thing. We also have the rate variance or price variance, and then comes the efficiency variance. So the question is asking, calculate the missing elements identified as A, B, C, D, and E. 5 items missing to complete the costing report. Now, how do I find out the missing item? So to do that, I must have a good knowledge of the variance analysis calculation. Okay? So first, I need to find out what is the standard cost per roll. Now, according to the question, standard cost allowed for units produced was $9,000. And how many units did I produce? 450 rolls of telephone wire. So I divide $9,000 by 450. I work out the cost, standard cost per roll is $20. Now, which I will work out as once I know the standard cost per roll, I can then answer part A. So part A is equal to standard number of pounds per roll is $20 divided by 4. Because each roll, $4 per pound. And the total cost I worked out per roll is 20. Divide by 4, I work out the quantity required for per roll is 5 pounds. So this is the answer for part A. Okay? Please, sir, if not clear, ask me. Next, I need to work out part B. Now, for part B, they say the total actual cost is given as B pounds costing 9,600. So I do not know what is the actual quantity I buy. So what I did, actual pound is equal to the standard cost, 9,000, plus the efficiency variance. Since the efficiency variance is unfavorable, I must add on. If it's favorable, I will minus. But if it's unfavorable, I add. So the total cost is 9,080. Divide by $4 per pound. That is the standard cost. I get 2,270 pounds. Now that's how I find out the actual pounds of material I purchased for $9,600. Then the material price variance is missing. And material price variance is the difference between actual price and the standard price. So the actual price times actual quantity is 9,600. I know that because the question has given me this information. From that, I minus actual quantity, standard quantity times actual quantity times standard price. So that gives me the standard cost. And difference is 520 unfavorable, and that is my price variance. So take note of price variance is a difference between actual price and standard price. Multiply by actual quantity. So it's 520 unfavorable because the actual price is higher than the standard price. Now that helps me complete A, B, and C. Then I come to the labor, direct labor, which is item D. Now what is missing? The total actual cost of labor is missing. And I know total actual cost will be total standard labor cost of actual hours. Actual quantity of product I make is 450 rolls. Each roll requires 3 hours per roll. And then multiply that by $8 per hour. Plus the efficiency variance 400. Unfavorable. And that gives me the total standard labor cost of actual hours, which is 11,200. This is my total standard labor cost of actual hours. So actual hours is equal to 11,200 divided by $8 per hour, 1,400. That is my actual hours. But the question is asking for actual costs. So take the actual hours, 1,400 hours, multiply by the actual rate, which is actual cost per hour 825, and that gives me my actual cost of labor, 11,550. And with that answered, I only have part E left, missing. Therefore, part E is price variance. See how I work out the price variance? Price variance is equal to actual quantity times actual price, which is the actual cost of labor, minus Standard hours, sorry, actual hours times standard rate, 11,200, which I already found out here. So the difference is 350 unfavorable. Yes? Sorry? Anybody has a question? I see somebody talking. Do you have any questions, student? Huh? No questions, sir? Let me go back to the discussion. Okay? Students, can you let me know whether I'm recording the session? Am I recording the session? Yeah? Sorry, am I recording? All right. Now, these are the three areas that I'm testing. I mean, these are the three areas I'll be testing in the exam. Ban, Chong, Kla. Yes? Do you have any question? If you're talking, please switch off the mic. Then, let me move on to question number 4. Question number 4. This question number 4 is on variance analysis. Can you look through the question first and try to work it out? Yes. Do you have a question? Van Tong La. You are, yeah? You are talking with the mic on. If you have question, then okay, I'm happy to hear your question. Otherwise, can you all try this question first? Question 4, all of you? You try this question first. I give you 5 minutes to look through this question before I start discussing. Do you have any question, student? Yes, you are calling me, but I don't see any response. Huh? What is your question? You have a question? Please ask me. You're just calling me, sir, but I don't hear anything from you. Huh? Can I help you? Yeah? Can I proceed with the question now? Because I want to finish up all the questions. Any question you have? Yeah? Yes, please continue your part. No question, huh? Thank you. Okay, if no question, let me carry on. Now, I asked you to look through this question on material and labor. And they want us to compute the total price variance, total variance, price variance, and quantity variance for material and labor. Now, if no question, I'm just going ahead. Huh? I hear somebody talking there, but I don't know what is your question. If you want to talk, you switch off the mic and talk, so that you will not disturb my class. Huh? Okay, let me go to the total material variance. Now, total material variance, the formula is actual quantity times actual price minus standard quantity times standard price. The actual quantity of material they have given me is 1,220 tons. And the actual price is 128. Whereas the standard quantity is 1,200 tons times the standard price 130. So I found out the actual cost is 156,160 minus the standard price 156,000. Therefore, I have $160 variance, unfavorable, because my actual cost is higher. That's why it's unfavorable variance. And this total material variance can be divided into price variance and quantity variance. So you see here price variance. Who is this student? Is always online disturbing me? Pan Trong Gla. Yeah, this student. Can you switch off your mic? So see the formula. The price variance is the difference between the actual price and the standard price. I take the actual quantity, the same, only the difference is between the actual price and the standard price. And you notice the actual price is lower than the standard price. Therefore, the resulting variance is favorable. And the next classification is the quantity variance. So quantity variance is the difference between actual quantity and standard quantity. Actual quantity is 1,220. Standard quantity is 1,200. So the resulting variance is unfavorable, 2,600 unfavorable. Now, if you add the quantity variance and the price variance, you get the net variance, which is the material variance, which is 160 unfavorable. Okay? Then we come to total labor variance. Same thing. Total labor variance is the difference between the actual cost and the standard cost. For actual cost, you take the actual hours. Standard cost, you take the standard hours. And also the actual rate is 13. Standard rate is 12.50. Therefore, you notice the difference is actual cost is higher than the standard cost by $200. Therefore, the variance is unfavorable. Which can be divided into price variance and quantity variance. So price variance is the difference between the actual rate and the standard rate. And you notice the actual rate is higher than the standard rate, therefore the resulting variance is unfavorable. Quantity variance is the difference between actual hours and the standard hours. Therefore, the resulting variance is actual cost is cheaper than the standard. Therefore, is favorable variance. 1875. After that, the question asks, provide at least two possible explanations for each of the unfavorable variances calculated above, and suggest where responsibility for the unfavorable result might be placed. So I said the unfavorable material quantity variance may be caused by carelessness or inefficiency of production workers, because they have used more materials than they should. Or alternatively, the excess quantity may be caused by inferior quality material, which is purchased by the which has been bought by the purchasing department. And the unfavorable labor variance may be caused by misallocation of the workforce by the production department. That means we have allocated people who are not qualified to do the job. That's why I say misallocation. In this case, more experienced workers may have been assigned to tasks normally done by inexperienced workers. An unfavorable labor variance may also occur when workers are paid higher wages than expected. And therefore, the manager who authorized the wage increase is responsible for this variance. Now, this is how you should answer the question. After you have calculated the variance, whether it's favorable or unfavorable, you still have to find out the cause of it. Okay? Now, any question here? Students, can you all hear me? Okay, I tell you what, we take a short break and then I will continue with question 5. Let's take a break of 10 minutes. Now the time is 10:25. I'll see you back in at 10:35. 10 minutes break. Okay? Let's take a break. See you later. Thank you. Okay? I hope all of you are back. Now, the next question I want to look at is question number 5. Now, this question number 5, you can do it yourself. I'll let you do the question yourself later. Okay? Now, let's look at question number 6. I'm sharing this question with you. For those who are here in the class later, please take note all these questions are uploaded in the LMS. Now you have to let me know to see, tell me if these questions, you can access this question in the LMS. Because I've had no response from you so far. Do you have these questions in the LMS? Can somebody respond? Thank you very much for responding. Thank you. So I will carry on next. This is another type of question in ABC, activity-based costing, that you have to practice. Because I said definitely this topic is tested in the final exam. Sorry, in the midterm exam. So you have to be familiar with this type of question. So can you look at that? Come on in manufacturing produces two types of entry doors, deluxe and standard. The assignment basis for support costs has been direct labor hours. So take note, they're using the direct labor hours as the rate. For 2009, come on in, compile the following data for the two products. The two products are deluxe and standard. The sales in units given, 50,000 and 400,000. Sale price per unit for each product given. Direct material and labor cost per unit for both given. And manufacturing support cost per unit for deluxe is 80, standard is 120. Now last year, come on in manufacturing purchased an expensive robotic system to allow for more decorative door products in the deluxe product line. Only in the deluxe. The CFO suggested that an ABC analysis could be available to help evaluate a product mix and promotion strategy for the next sales campaign. She obtained the following ABC information for the year. Their activities are set up, mission related, and packing. They have given us the cost driver for each activity, For example, number of setups for setup activity, for machine-related machine hours, and for packing, number of shipments. This is the total cost given: 500,000, 44 million, and 5 million. This is the total setup, machine hours, and shipment. And this is the individual, deluxe, and standard. Number of setup is 400 for deluxe, standard 100. Machine related is 300,000 for both. Packing is 50,000 for deluxe, 200,000 for standard. Now, what are you required to do? They say, using the current system, what is the estimated total cost of manufacturing one unit for each type of dough, and the profit per unit for each type of dough? And take note, the current system is the traditional system where they use labor hours as the basis. Okay? So this is how you should work it out. If I use labor hours, currently estimated deluxe entry dough total cost per unit is 260. How? Because they've given us 180 for material and labor, $80 for overhead. So total is 260. Next comes the standard entry dough. This costs 250, which is same thing. Material and labor, 130, and overhead, 120. So total 250. So the question asks, what is the profit per unit for each type of dough? For deluxe is 390. That is selling price minus the total cost. Selling price is 650 minus the total cost 250, and that gives you $390 profit. For standard entry dough, the profit is 225, where its selling price is 475 minus the total cost 250. Okay, this is how you show the working and the answer. Next, part B. Using the current system, estimated manufacturing overhead costs per unit are less for the deluxe dough, $180 per unit, than the standard dough, which is 120 per unit. What is the likely explanation for this? Now, please take note. The deluxe dough, they are using more robotics. So they have automated the system. Therefore, the cost should be higher. But the standard dough, they're using the traditional system, that system of production. So it should be cheaper. So that's why they're asking us this question. So I said, for this part of the question, I say, support manufacturing costs are currently allocated based on direct labor hours. And because deluxe dolls are manufactured using the new robotic system, it appears that less direct labor is needed to manufacture each unit in the deluxe product line. Okay, so that means they are using less direct labor hours. And that's why the overhead cost is cheaper, lesser. Okay, but see, Review the machine-related costs above. What is a likely explanation for machine-related costs being so high? What might explain why total machining hours for deluxe doors, 300,000 hours, are the same as the standard doors, 300,000 hours? Okay? They're asking for the machining hours. As we have looked through the question, we know deluxe doors use more machines because it's automated. Whereas the traditional standard doors, they're using the traditional method. So that's why they're asking why you think the hours are more. The same, but the overheads are so different. So I said, the high machine-related costs are probably a result of purchasing new robotics equipment for the deluxe product line. Yes, the total number of machine hours is the same for each product line. But the deluxe line uses 6 machine hours per unit. How I know that? Because the question said they had 300,000 hours and they produced 50,000 units. So 300,000 divided by 50,000, 6 hours is the machine hours per unit. While the standard standard product line only uses 0.75 machine hours per unit. Because the same 300,000 machine hours, but they produce 400,000 units. So divide that is 0.75. So by evaluating machine hours per unit rather than total machine hours, these numbers make more sense. Okay? So this is how you should answer that. Part D of the question, using the activity-based costing data presented above. Compute the cost driver rate, compute the revised manufacturing overhead, and then compute the revised total cost. And he said the steps follow as like this. Manufacturing overhead cost driver rates are: setup activity is $1,000 per setup. $500,000 divided by 500 setup. Therefore, the cost per setup is $1,000. And machine-related activity is $73.33 per machine hour. And see the working? 44 million divided by 600,000 machine hours. This is the cost per machine hour. And packing activity is $20 per shipment. 5 million divided by 250,000 shipments. So it gives me $20 per shipment. So after you work this out, the question wants you to revise the overhead cost per unit. For deluxe entry door, the cost is $468 per unit, revised overhead cost. How? For setup, 400 setups at 1,000, 300,000 machine hours at 73.33, and packing, $20 times 50,000 shipments per unit. So works out to be, divide that by 50,000 units. And that gives us the deluxe entry door cost. For overhead only, yeah? For standard entry door, is 65.25 per unit. Same thing, $1,000 per setup times 100 setup. Machine hours, 573.33 times 300,000 machine hours, and plus $20 per shipment times 200,000 shipment. And divide that by 400,000 units, that will give us the cost per unit. So it's 65.25. Now you see the revised overhead cost is so much cheaper for standard door compared to the deluxe door. So what is the revised total cost per unit? For deluxe entry door is 648, which is 180 plus 468, so 648. And for standard entry door is 195.25, which is the material and labor plus the overhead cost. Then I come to part E. Is the deluxe door as profitable as the original data estimated? Why or why not? So now you see the revised. I say no, the deluxe door is not as profitable as originally estimated because the deluxe door requires a disproportionate share of the overhead activities. And this was evident because they used the robotic system, more machine hours, and therefore more overhead costs were assigned to deluxe door when using the ABC method. So revised profit per unit of the deluxe entry door is $2. Selling price minus the total cost, 648. For standard entry door is 279.75. Selling price minus the total cost, which is 195.25. All these are worked out in part D. So currently the estimated deluxe entry door profit per unit is $390. That is selling price minus the current cost under the traditional system. And for standard entry door is 225. 475 minus 250. So you see the vast difference here. And look at the profit for the deluxe door, $2 using the ABC. But using the traditional method is $390. And standard entry door is 225. And the revised profit is higher, 279.75. So this is what I want you to observe. And that's why they say the ABC system gives a very correct value or more accurate overhead cost allocation. Whereas the traditional system, we have grouped up all the overhead costs. But in the ABC system, we have spread out. That is, we disaggregated the total cost into different activity. Okay? Now, any query? Any questions so far? For question 6 just now, part F, you can leave it out. Okay? I'm not looking at that part. Now, let's look at a discussion question number 7. Because you should be prepared for this type of course as well, this type of question as well. Okay? Now, I want you to review this question 7. I give you 10 minutes to review and think of how you will discuss this. Because a question like this, similar to this, will appear in the midterm exam. So I give you 10 minutes to review this and think of all the possible ways you can report this information. Students, have you all reviewed the question? Will you be able to answer this question? The discussion question. Jonathan has managed a downtown store in a major metropolitan city for several years. The firm has 10 stores in varying locations. In the past, senior management noticed Jonathan's work, and he has received very good annual evaluation for his management of the store. This year, his store has generated steady growth in sales, but earnings have been deteriorating. That means falling. After examining the monthly performance report generated by the company budgeting department, he noticed that increasing fixed costs is causing the decrease in earnings. Okay, Jonathan's earnings have been dropping his store. Administrative corporate costs, primarily fixed costs, are allocated to individual stores each month based on actual sales for that month. 2 of these stores are currently growing at a rapid pace, while 4 other stores are having operating difficulties. So take note. Required from the information presented. What do you think is the cause of Jonathan's reported decrease in earnings? How can this be corrected? Students, would you like to participate in the discussion? Can I hear your views? Anyone? Because I notice usually when it comes to this kind of discussion question, Vietnamese students usually will not want to answer them. They only prefer calculation type question, but discussion questions are equally important because you need to discuss the results of the company. So that's why I'm wanting you to practice answering this type of question. Because in the exam, questions like this are very common. Like just now you see the question on ABC. They want you to compare the new system with the old system, the traditional method with the current ABC method. So this is what you have to be aware of. Now, one thing is this, you can be very sure that it's very unfair for Jonathan to be reprimanded for a drop in the earnings because this has nothing to do with his performance. Because when you talk in terms of costs, there are 2 types of costs. Cost that is primarily associated with their individual stores. And then there is also costs related to overall. When I say overall means I'm referring to the corporate costs, administrative corporate costs. And how they are allocating the corporate costs is that they are apportioning it on the basis of actual sales. And the question says that Jonathan stores For Jonathan, his store, there is a growth in sales. So the question is it fair to charge him more for fixed costs because there's a growth in sales? And those stores that have lower sales are charged less for fixed costs. So I want you to visualize this view, this statement. Okay? So I want you to mention this when you discuss questions like this. And you look at how I answered the question. I said, the variations in reporting are probably caused by the growth fluctuations of the other stores or branches. When fixed costs are involved in an allocation process based on actual usage, one unit receiving the allocation can have changes, even when it doesn't change itself. And this is caused by the other stores causing changes in the allocation base, thereby causing everyone to receive different allocation amounts, even those who don't have changes in their base. Because Jonathan's sales have been increasing, so his allocation of corporate fixed costs has also increased. And if you notice, he has no responsibility over this increase in fixed costs. Because fixed cost is administrative. It's a corporate office cost. And he has no say in the allocation of this cost. So this is what I highlighted just now. So I said to correct the problem, the corporation should change to using budgeted performance as the allocation base and use the denominator level that reflects expected performance over the long run. Therefore, an allocation base other than sales may also need to be considered. Okay? And this is how I think I would like to answer the question. It's not fair to allocate on the basis of sales. And if I allocate on the basis of sales, it tells me that the store that makes more sales will be charged more fixed costs. And the store that makes lower sales will be charged less for fixed costs. And I say this is not fair. Okay? So this is one of the points that I want you to consider here seriously. So please be familiar with this kind of discussion question in the exam. Maybe in the midterm, I may not have many, but definitely in the final exam, there will be many of these type of questions that you have to consider and discuss carefully. Okay? Now, is there any suggestions from you? Students, do you have any suggestions that you would like to bring up? No? Okay, if no question, let's move on to another theory type question. Question 8. It says, what are the factors that are causing many companies to refine their costing system to obtain more accurate measures of cost of their product? More accurate measures of the cost of their products. Yes? How will you deal with this question? Now, this type of theory questions will usually be part of a question. No? If A is calculation, then B is this kind of discussion and theory question. Okay? Now, I give you 5 minutes to review this fast. 5 minutes only, yeah? Then I'll come back to it. I want you to review. Okay? Let's look at this question 8. What are the factors that are causing many companies to refine their costing systems to obtain more accurate measures of the cost of their product? So I said, this is how I will like to answer. I said the first cause is the increasing the product diversity. Companies are producing many more products than they used to, placing strains on more simple, older cost system. Okay, this is very clear because they, for one product, there are many varieties of product they have. And each of these varieties, they have something new included. And therefore, it affects the cost of the product. It's not of the same price. So second cost is the overall increased in indirect costs and the relative decline of direct costs. And this is a trend you see nowadays. The importance of fixed costs and variable costs. You notice nowadays most of the variable costs have turned out to be fixed costs. And this is because of the variation in the product content or a variation in the product structure. So I say indirect nature of this cost requires allocation. And any inaccuracies in the allocation of this cost become magnified as these indirect costs increase. Okay, so this is an important point to know. Because many products have different varieties. Like for example, just now the dough, the production of the standard dough and the deluxe dough. The deluxe dough is a variation of the standard dough. And when they make this kind of variations, automatically the cost allocated will be different. And then I say, third cost would be advances in information technology that makes complex allocation of indirect costs. Thus making it less burdensome. As I said just now, in the same question we look at just now, the deluxe store. Because it's automated, most of the work is done by machines. We are less and less dependent on labor, direct labor. And this is evident in the advancement of technology. Finally, increased competition from both national and international competitors has resulted in more pressure to reduce costs, as well as the need for and value of information to support responses to these new threats. So this is what the general nature of production has become. With the competitive process involved, everybody wants to produce something different, and they want to produce something that is fast, cheap, and also effective. And this has just resulted in new threats to the current manufacturing. So no longer a product that he thought was very good will be used again without any changes. So this is how I will answer this question. And this is something of relevance to our decision making, which is part of management accounting when we make pricing decisions. Okay? Now, if you feel there are other issues that you'd like to add in, please include them in. Okay. Next, I wanted to look at question number 9. Question number 9 is on ABC, activity-based costing. So I would like you to try it yourself. Okay? Can you look through the question first? See whether there are any technicalities you need to be concerned of. Now think about it, look through this question for 10 minutes, and then I'll come back to you. Students, have you all gone through the question? It says it's because the cookie company manufactures 3 flavors of cookies: macaroon, sugar, and buttercream. And each batch of cookies, they produce in batches. And each batch is limited to 1,000 cookies based on the size of the ovens and the cooking molds owned by the company. Based on budgetary projections, the information listed below is available. Macaroon, projected sales in units for macaroon, sugar, and buttercream given. Per unit data for all 3 products given, selling price, as well as the material costs and labor costs. And hours per 1,000 unit batch for each macaroon or cookies is given. And there are oven hours, labor hours, and packaging hours. Now, total overhead costs and activity levels for the year are estimated as follows. Now, direct labor hours is direct cost, so they gave this figure. But the oven and packaging is overhead. And they have given us the cost drivers in each activity. For oven is oven hours, for packaging is packaging hours. So here the question says, determine the activity cost driver rate for packaging costs. So this is how you should work it out. They're only asking for the packaging. So the activity cost driver rate will be packaging overhead divided by packaging hours. Packaging overhead is 150,000 and packaging hours is 950 hours. So the rate works out to be 157.89 per packaging hour. After that, the next part of the question, using the ABC system for the sugar cookie, only the sugar, because they have 3 types, macaroon, sugar, and buttercream. They only focus on sugar cookies. Compute the estimated overhead cost per 1,000 cookies. And compute the estimated operating profit per 1,000 cookies, because that is their batch size. So, to compute the estimated overhead cost for a batch of sugar cookies using ABC system, first calculate the activity cost driver rate for the oven activity. For oven activity, the activity cost driver rate is oven overhead divided by the oven hours given, and is 110.53. Then calculate the overhead for 1,000 cookie batch by multiplying the number of activity hours per batch by the appropriate activity cost driver rate for each relevant overhead activities. So, and you get the sum and take the total overhead for the batch. So here I have 2. One is the oven cost, which is 1 times 110.53 oven. And then for packaging hours, 0.5 times 157.89. So the total overhead is 189.48 for a batch of 1,000 cookies. So this is what I have to find out. Then after that, to compute the estimated profit for the batch of sugar cookies using ABC, from the revenue minus the cost. So to subtract the cost from the revenue, you see what I did? Take the revenue for 1,000 cookies, then deduct the material cost and labor costs, and then the overhead costs. Okay? So the total overhead cost is 189.48. That is direct material plus direct labor plus the overhead that I've already found out here. Add in. So sales minus this cost, material, labor, and overhead cost gives me an operating profit of 390.52. Okay, this is how I work it out. Now, any questions so far? Students, are you all able to follow?
Yes.
Okay, thank you. Now let's go to part C. Part C says, using the traditional system with direct labor hours as the overhead allocation base, for the sugar cookie, compute the estimated overhead cost and the operating profit per 1,000 cookies batch. So, to compute the estimated overhead cost for a batch of sugar cookies using the traditional system, which uses the overhead rate per direct labor hour. So the overhead, total overhead is 360, which is packaging plus oven hours. Divide by the total direct labor hours, 2,400, given in the question. So it works out to be $150 per direct labor hour. So since it takes one direct labor hour per 1,000 sugar cookies, the overhead is 150. Then to compute the estimated profit for a batch of sugar cookies using the traditional system, subtract the cost from the revenue. So the revenue minus material cost, labor cost, and the overhead cost works out to be 430 per 1,000 cookies. This is using the traditional system. Then the next part of the question says, part D, explain the difference between the profits obtained from the traditional system and the ABC system. Which system provides a better estimate of profitability? Why? So here, the traditional system makes a profit of 430, but the ABC system makes an operating profit of 390.52. Okay? And notice the traditional system shows more profit than the ABC system. But we know the ABC system is bound to give us more accurate result. So they say because the products do not all require the same proportional share of direct labor resources, the allocation of the total overhead on that basis is not as accurate as using the ABC system. The ABC system allocates the overhead based on activity levels for the specific categories, as well as activity usage by the product line. Now, this is what or how I should answer that. Okay? Now, please look at the way the question is answered based on the areas or issues they have raised in the question. This is how you should learn how to answer this type of theory questions. Okay? Now, any questions, students? Now, there are three types of ABC questions I've done. So I wanted to revise these questions thoroughly. A question similar to one of these will appear in the midterm exam. Okay? Next, question 10. Now, this is on variance analysis. I would like you to try the question yourself first. And then I come to question 11. It says, Medoc Corporation product number H647 has a negative contribution margin. How can such a situation arise? Should the company continue to stock and sell product number H647? Explain. Now, contribution margin is the difference between selling price and variable cost. Okay? And normally selling price minus variable cost will give us a positive contribution margin. And therefore, we will produce those products that give us a positive contribution margin. Now here the question says it has a negative contribution margin. So how can such a situation arise? So I said, look at my discussion. And that negative contribution arises because selling price is less than variable cost. Several reasons may create this situation. For example, inefficient operation, thus higher cost. Take note, if the cost is higher, it will give us a negative contribution. 2, a very competitive marketplace, which has forced the firm to lower its price. Now, this is another reason. Sometimes to keep up with the competition, we purposely reduce the selling price. And there will come a situation where the selling price is lesser than the variable cost. That means I'm not able to cover my cost of the product. Or purposely, I can sell the product at a loss. This is what you call a loss leader, whereby the Medoc is purposely taking a loss on product number H647 with the intent of stimulating customer demand for other more profitable products. Now, this is what they are planning to do. And this kind of situation arises in competition, especially in the supermarkets. You notice that one or two products are sold at a very low price, and thus gives us a negative contribution. And these kind of things they advertise in the papers, thereby attracting more customers to the supermarket. But when customers come in, they don't only buy that one or two products, but they also go for other products, where the loss can be compensated by profits in other products. Now, this is the kind of situation we have. So I say each unit sold will lower overall profitability. So technically, Medoc should not continue to sell products number H647. However, for reasons 2 and 3 above, the firm might decide otherwise and stick with this loser. Okay, so they sell one or two products at a very low price and make losses with the hope of attracting better profit for products that makes better contribution. So this is how they will compete with one another. Okay? Now, then I have the remaining questions, which I'll discuss after the break. We can now go for a lunch break, and then I come back at 1. Okay? So that is my next session of the revision. So I want you to go through all the questions when you have time to review them. We are actually breaking for lunch now. Okay? And then I'll see you afterwards. I'll see you at 1. Now 1 is Malaysian time. For you is 12. Okay? I'll see you in 1 hour's time. Okay. I'll go through the rest of the question and see whether you have any doubts or any clarification. Okay. So I will stop the class now and continue afterwards. Okay. So let me stop the sharing. That means I want to stop the recording first. And then I'll come back later.